Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to have a look at one of the biggest mistakes that the majority of people make when we get out of a bear market and into a bull market cycle. I'm going to also have a look at the 60-day cycle and bring something to your attention which one of our subscribers mentioned to me from the last video. And finally, I'm going to have a look at the update on the miners portfolio and why I've added one company with very great potential to actually increase by a huge percentage during this bull cycle runs. And if that sounds interesting, then without further ado, get yourself a cup of tea, relax and sit yourself down, eyes on the screen, and let's get cracking. And before I start, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please do your wider research before you make any investment decisions. Okay, so I'm going to start off with the biggest mistake that the majority of people make once they've actually convinced themselves that they've bottomed out and that we're now in a bull market rally over here. And we can understand this mistake because if you look at it from the wider picture, as we know, the market topped out here at 69,000, and the majority of people, they actually rode this market up from all the way up here. And as the market was going up here, they were looking at their bank portfolios and looking at how wonderful they've done and how geniuses they are being able to ride this big market. They had a dip in their emotions over here. Then we recovered at this point, and they thought, well, now that we've double topped, there is a great opportunity now to go much further. However, that portfolio, they've been watching this go down and down and further down to this point where it's drained everybody out of all the emotions, all the positivity. And now what we've got is that people who were lucky enough to get in over here, they've seen quite a large increase in their portfolios over here. And once we got to where we are now, and we know that this is a very strong neckline at the $25,000 mark, it's quite understandable that if you watch your portfolios go dwindling down like this, any first sign of hope that we're recovering, you don't really want to lose this amount of money over here now. So it is very tempting to actually try and take profits over here. We all know that the market could quite easily come down to this level again, around about the 18,300 mark. And it's very tempting to think that the market's going to come back down and then we can pick up more units at that point. But the question we always have to ask ourselves is, what if the market doesn't do that? And the problem I think people don't realize is that people have lost nearly 80 to 90% of their funds down here, and they're going to try and make that up by getting a little bit cute over here and try and make up those units by these little falls that you're expecting, but they may not materialize. And you've got to be very, very careful not to make this mistake, simply because the chances are, and in my experience, it doesn't normally work out when you try to do that, especially at the first part of a bull cycle run. And what tends to end up happening is that the positions you get into over here, you end up losing at these points, because while you're expecting the market to do that, it quickly turns around and starts doing this. So instead of picking the units up at this point, you end up buying at these points up here, much, much further up. And you lose those original positions that you got into at this point down here. So very important, keep this in mind. At the end of the day, it's your money. You can do whatever you want with it. I'm just highlighting one or two of the things that I've done in the past. I've made this mistake in the past, and I'm hoping that other people won't make the same mistakes and you can learn from my mistakes of the past. One of the solutions to this kind of issue is that instead of taking profits at this level, and it may well work out okay, I'm not saying it won't, because at the end of the day, nobody knows what's going to happen tomorrow. But if it doesn't happen, that the market comes down to a level where you can buy back and pick up more units. So instead of doing that, you may be better off waiting for more of your funds to develop and increase until you get to much higher levels, where we know that there is a very good chance, if you've been watching my videos in the last few weeks, I've been giving you certain levels that in the past cycles, if you base the historical context of that, in the past cycles, we know that the market tends to come back up to around about the 78.6 level. And we measured that to be here in this cycle, to be around about the $50,000 mark over here. So this may be the best point really to do what you may be wanting to do down here. Because by this time, when you get to here, you've built up a lot of funds, and maybe you can take a little bit of a risk to allow it to come back maybe down to the 61.8 level, which would be a safe level. Of course, the market can go much further and has done in the past, but to be on the safe side, so you protect the units you've got built up from here, and you take only a small risk and buy back at this point. So that would give you, from this level around the 50,000 down to the 61.8 level, a 22%, around about a 20% increase in the number of units. And that's a safe way of doing it, because the risk reward is much greater at this point here. So your reward will be that with a high degree of probability, the market will come back and correct from a higher level down here than it is more likely to do over here. Once you've built up a lot of funds here, you've got more money to play with, and therefore your risk would be much less, but your rewards would still be around about the same over here as they are down here at the $25,000 mark. Everybody has to work out their own strategy. I'm just giving you some insight into how I'm thinking. And obviously that position is for long-term investors. If you're a trader, and I do my trading by about 10%, and I said in the last video that I took a trade at this point when I saw this candle formation down here, and now the price has come to my take profit level. So in my trader portfolio, yes, I've taken profits here. And I mentioned in the last video that I'm going to ride it all the way up to 25. So as soon as it hit 25, I took the profits there. But in my long-term portfolio, I'm obviously leaving that completely intact. And moving on to the 60-day cycle, I want to say thank you to one of my subscribers here, and that is Chromatic. And he mentioned actually that if we count 240 days, i.e. 4 times the 60-day cycle, starting from the June 18th low, then we'll get exactly to the Dragonfly Doji candle formed last Monday. So thank you to Chromatic for bringing this to my attention, and we can have a look at this now. The Monday's candle that he's referring to is this one here. This is the Dragonfly Doji candle that I mentioned in my last video. And if you watched my last video, you know that I was playing around with this 60-day cycle and adjusting it to see whether the cycle has adjusted a little bit. So what Chromatic was saying was that this June 18th low here, if we take 240 days, that means 4 cycles of 60 days. From there, it takes us exactly to this Dragonfly Doji candle, as you can see here, 240 days. And if that was the case, then we can move this red line over here to this Dragonfly Doji candle, and that would suggest that we've now gone into a next cycle, the next 60-day cycle over here. And if this was the case, which it looks likely, then what we can do is we can bring this next 30-day midpoint of the cycle up to around about the 15th of March and move this midpoint cycle to that point there. So we'll see whether this develops. If we do start running down, then this may have to be readjusted back. We just want to make sure that we're in the right part of the cycle. And obviously there's not a hard and fast rule. Quite interesting that this 240 days actually ended up at this cycle low point here, if the cycle was to be coming up to this point. So we can make adjustments going forward, but let's see how this develops now. So obviously if the cycle has started here into the next 60-day cycle, this is the midpoint now, going to be around about the middle of March. And so I would expect some sort of a trajectory up here. And if we zoom out, we can see that the next targets would be in the region up here at the around about the $32,000 mark, or the underside of that, which is going to be around about 28,000. So let's see which levels it gets to. But we need to be just aware of these two levels, that once we do get past the 25,000, then the next level is going to be 28 and 32 over here. And we'll see how the candlesticks formations develop over here to give us some sort of an idea, some sort of a clue as to the direction the market's taking into the mid-cycle point in mid-March. And if you've been following me on Twitter, you'll know that I've been posting quite a few bits and pieces of the important things in the charts to bring you up to date with what's happening. The most important one is this weekly chart with the 50 simple moving average, the white line, and the green 200 simple moving average. And as you can see, the price had come all the way up to that level. And I said here that we need to actually pay attention here that Bitcoin was testing the underside of the 50 and the 200 simple moving average on the weekly chart. Not easy to get above these two moving averages, especially the 200, But if we flip and close above the 200, then the bull market will officially start. I am expecting some consolidation around this level. So this is exactly what's happening here. We've got rejected at the $25,200 mark. So that's the figure that I've been mentioning all the way when we started to rally up here. 25.2 has always been our main level based on this neckline over here. Support and resistance. And this has been playing out really well at the moment. And those with a keen eye will tell me very quickly that this is a death cross happening. And this is one classic example of why we should never ever take one indicator as the panacea for what's actually happening in the market. There are so many bullish signs and there are so many bearish signs, but on the whole, with a higher degree of probability, there are far, far more positive signs that we've bottomed out and that we're on a bull market run. And there's a few signs like this death cross which are telling us that the market may be wanting to go much lower. At the end of the day, nobody knows how it's going to play out, and we have to play the probabilities game because there is no certainty, there's no guarantees in this market, and we always have to weigh up all the balance, that with a balance of probabilities, which way is the market going to go? And my narrative, as you know, has been from down here, that on the balance of probabilities, with the more positive indicators pointing us to the upside direction than there are the indicators pointing to the downward side. And if you want to join us on the Twitter, then please do remember to click on the Twitter link page below all of my videos. Okay, so I'm going to move on to the miners portfolio. First, we'll have a look at the leaderboard on the Bitcoin miners portfolio. These are about the 18 or 20 companies that I'm following. And as you can see, it was a bit of a mixed picture yesterday's close here, with Marathon having a bit of a pullback, down 9%. Then we had ones that going up, the Stronghold Digital Group here going up 19%, and Argo here having a run up by 15%. So quite a bit of a mixed picture over here. So if we have a look at the Bitcoin miners portfolio, which we started last month on the 5th of January. So our starting capital originally was $100,000 with a target of $1 million by the end of 2023. And we picked out of all these stocks over here, we picked 8 initially, and we assigned 20,000 to Marathon and 20,000 to Cypher and 10,000 to the rest of the other stocks. And I mentioned at the time that the two fastest horses which I think are going to do the best in the whole of the 2023 are going to be Marathon and Cypher over here. To this list I've actually added yesterday Stronghold, and that's this one over here, the Stronghold, which went up by 19%. And I'm going to show you the chart for that to give you the reasons why I've actually added Stronghold to my list over here. So far, the average increase that we've had since last month is 100%. So the prices have basically doubled. The standout companies so far are Iris Energy over here, and they're now up by 224%. So we added them at 128, but they've had a massive run in the last few days to $4.15. And the next one to that is Cypher Mining, which is up at 191,000. And Hut 8 has also done very well with over 100%. And Bitfarms at 106%. So really there are 4 horses which are doing really, really well at the moment. But I do expect Marathon to catch up. It's had a bit of a correction in the last week or so. So our $110,000 is now currently standing at $226,000. And this is the one I've added so far, Stronghold 10,000 yesterday, and I bought 13,888 units at 72 cents. So the charts really here begin at the end of 2021, and the highest point was reached at around about $36 here. And just like all the miners, it's had a massive fall in the price over the last year or so. But while the other miners have actually had a very big increase over here, Stronghold hasn't actually had much of a rally. And I was waiting for a bottoming out pattern to develop before I made any commitment to any funds here. So what we've got down here at the bottom of this bear market is a classic double bottom pattern developing. And just like the 18,300 for Bitcoin, we got a similar one over here. And as soon as it breached yesterday, if we have a look at the daily chart, it gives us a better picture. And that is that as soon as it breached yesterday, I was looking to buy into this Stronghold. Please remember, this is not financial advice. I'm not saying to you, you should go and buy this as well. I'm just giving you, for the benefit of my Bitcoin miners portfolio that I've been running since last month, this is what I'm doing. Please do your wider research, because these stocks are incredibly volatile, incredibly risky, and you could easily lose the shirt on your back. So I could never say to you that you should go and buy any of these miners. If you want to play safe, I would keep completely away from the Bitcoin miners because they're a very high risk and a very high reward play. And if you know what the risks are and you know what you're getting into, then that's your decision. And I can never say to anybody, you should go and buy this. So I'm just giving you my insight into my thinking of why I bought this. So we've got a very strong neckline over here, a very highly defined resistance point. We broke through that, although we've been... What was interesting to me was this candlestick pattern development here. This is a classic morning star. So once I saw that, this candle here, yesterday's candle, was confirmation that this pattern is now playing out. So while Bitcoin is having a retracement, and we may well get a retracement here as well because we've had such a big run up here. From the bottom, it's run up all the way up to yesterday's high of 125% within just 3 days. So for me, it was an opportunity to get in at a much lower price. So if you have a look at one of the other miners like Cypher, from its bottom, when Bitcoin had bottomed out, this had run up to all the way up to about 600%. And many other ones have actually run up by 100, 200, 300%. While Stronghold is just beginning its journey, so for me this has got a lot of legs. Stronghold hasn't really done that yet, and it's just a little bit behind that time period. So we'll see what happens. Nobody knows the future. All I can do is read the charts, and the charts here are telling me that we've now come to a double bottom. A higher second bottom is always more stronger, I find. And then we've got a defined neckline which is just breached over here, and we're in the middle of a bull cycle according to my narrative. So with all those points pointing to Stronghold going in the upward direction, I thought I would add this to my current portfolio. So this is the reason why I've added Stronghold to my list here, because I think there's a very good opportunity for Stronghold to catch up. As a point of interest, before we finish, I just wanted to ask you, because I know many people have asked me about the Bitcoin miners and they're very, very interested. And I know from the Twitter pages, there's a lot of you who actually do options trading on the Bitcoin miners. And I just wanted to ask you, if you want to leave some comments in the comment section, how many of you would be interested in having a members only video which covers only the miner stocks, where I actually look at all these charts and bring to your attention any developments in the candlestick patterns, in the horizontal support and resistance points, where it would be safe to take profits or not to take profits, and that kind of thing, where I can just focus on the Bitcoin miners over the next 2 to 3 years and give you some sort of an insight into what my thinking is about what's happening in the chart. So if you're interested in that, I could only do that in a members only section. And if there's enough interest, I'll start that. If there's not, then obviously there's no point in doing that, and I'll continue my normal 2 videos a week. So nothing would change. It's just that a lot of people do ask me about the Bitcoin miners, and the only way really to do it would be a members only section, like on a Wednesday, and where I could just go and look at all the Bitcoin miners charts, because I know that there's nobody really looking at the charts of the Bitcoin miners. There are 1 or 2 other YouTubers who cover Bitcoin miners, but they don't really look at the nitty-gritty. They don't look at the support and resistance. They don't look at the classical charting patterns, etc. And if you want me to do that, and if there's enough interest, then I'll start a members only section on a Wednesday. So let me know in the comment section about that. And on that note, I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.